In this video, I will show you a very simple strategy to find better entries. So at the end of this video, you will know exactly how you can find entries using this 4-step plan. So let's dive into it, because to be honest, this is one of the most simple ways to find entries that are profitable. Because I've been using this myself for a long time as well. Now I have a more complicated strategy. I will also make a video about that as well. So this is a way to just simply find entries, especially for beginners. This is just great because it's not too complicated. So step 1, and I'm gonna explain the terminologies that I use. Step 1 is identify a rapid price movement. So you wanna find a rapid price movement, which is basically, as the name says, a rapid price movement upwards or downwards. So let's say you have this kind of ranging price action and you see a very rapid movement going upwards, then obviously that is your rapid price movement. So we would say this is the rapid price movement. And then what you're also looking for is that the movement created a gap. So here you can see it created this kind of gap in price action, and price will likely fill up this gap. So we are looking for a rapid price movement that formed a gap here. And later in the video, I will show examples as well. By the way, if you're new, my name is Alan and I make all of these videos completely for free because I don't sell a course. My goal is simply to help you get profitable. And if you struggle to get profitable, watch till the end of the video because I can tell you more about how to get profitable. So let's just go to the second step. So we made the first step. Now the second step is find a fair value gap or imbalance. So it's basically the same thing. Most people call it either a fair value gap or an imbalance. So a fair value gap is not a gap like this. This is like a bigger gap in the price action. A fair value gap is a gap between candles. So when you have 3 candles in a row, so you have your first candle, your second candle, and your third candle, then it's the space between the first candle and the third candle. And I've also made a video about fair value gaps. You can watch it as well. I will put it on the top. So this is basically how you find a fair value gap. So it's the space between your first candle and your third candle. So this space. Why are we looking for this fair value gap? Well, this is really important because that's what price will be looking for. That's what the algorithms are targeting. So price will very often look for those fair value gaps, and therefore they form very good entries. So that's the second step. And the third step is identify a demand or supply zone. So I will show some examples in this video, but basically the demand zone is the candle below your fair value gap. So it's relatively easy. If you can find your fair value gap, the candle below it, you can select the whole candle, and that's your demand zone. So the demand zone is the first candle that created this rapid price movement and created a fair value gap. So you need to have both of them, both a fair value gap and a clear candle that you can mark as your demand zone, and then you have enough to find your entry. And the demand zone is where there's a lot of buying pressure, so like this, and a supply zone would be where there's a lot of selling pressure. So the supply zones are to place a short and demand zones are to place a long. So now we have made the third step, and now we have the fourth step, which is place your entry. And I will show you how to place the entry in the chart. So I found an example, and by the way, you can use this on any time frame. So now I'm using it on the 50 minutes. You can use it on the 5 minutes, on the 1 hour, on the daily, on whatever time frame you would like to. That's why it's so simple. You can easily use this if you're a beginner SMC trader. You can pick any time frame and start applying it. So as you can see with the first step, I found a rapid price movement going up. So you see that price was going down like this, and it was kind of slowly moving down. Then it created a rapid price movement upwards. So it also created a gap here. So if we just look at it like this, we can now see that it created this gap. So we are looking for a imbalance or fair value gap, as you would call it, and a demand zone. So what I can see is that here in the beginning of the movement, you can see that this is a fair value gap, and the fair value gap has already been filled up by a small wick. That's why we moved the fair value gap to here. And again, if you don't really understand the fair value gaps, you can watch my video about it and then we'll go more into detail. So because the wick already filled up some of the fair value gap, now this is your new fair value gap here. And you still have this emptiness, you still have this gap that will be filled up by price. And because there's a fair value gap here, this is your candle that created this rapid price movement. So this is the demand zone. So now we've gone through all these steps. So we identified a rapid price movement, we found a fair value gap, and we also found a demand zone. So now you want to place your entry, and you can place your entry basically either on top of the fair value gap. So that would be here. So your entry would be on top of the fair value gap, or you could place it on top of the demand zone. So what I recommend is first, if you're starting out, go with an entry on the demand zone because that's more defensive, that's just easier. So place it on the demand zone, and you also don't have to place your stop loss really wide. So this would be your entry. We won't be covering the stop loss because that's just a totally different video. But this video is about how to find entries with a very simple approach to trading SMC. So let's see what would have happened if we placed our entry on top of the demand zone. So as you can see, in the first place, it could have been filled here. And if you place your entry at the top of the fair value gap, you would have had two places where your entry could have been filled. Because we're using limit orders, so you either place it here and you get filled automatically by price with your limit order, or you place it here on top of the demand zone and you are barely filled by price. And this is what we call the spread as well, by the way. So in Forex, there's always a spread. Now I'm using GBP USD as the pairing. You can use it on any pairing. But in Forex, you always have a spread. So you don't want to place it exactly on top of the demand zone. You want to place it a little higher so that you can cover the spread. Because the spread is the difference between the buying and the selling price, which will make you miss your trades very often. So this was the first example. Let's go to the next example. So this is the next example. And first we are going to find a rapid price movement. Well, as we can see, price has been ranging here with low volume. Then it created this rapid price movement downwards. So we are looking for possible trades in this rapid price movement. So just looking at the starting point of this rapid price movement, I can see a fair value gap. So this is your fair value gap. And it's a small fair value gap, but that really does not matter. It doesn't matter what the size of the fair value gap is. It's just valid when there is a fair value gap. So you can see that it was created here. Therefore, this is our candle that we use for an entry. So this is the supply zone on the 50 minutes. This is the fair value gap. And again, you can choose to either place your entry on the fair value gap, which is more aggressive, or you can place it on the supply zone. So let's do this in this example. Let's be more defensive. So we place the entry on the supply zone and let's see what would have happened. So as you can see, price filled your order here. So this is where your entry was activated if you used a limit order. And then you had all this way down to get profit. Well, let's say that you place the trade like this. So you place your stop loss at least above this high, and I like to be even more defensive. Again, I will cover this in a separate video. But let's say you had your stop loss like this. Well, you can clearly see the potential for profits because you were filled here. So you could have had all these profits going down, which would have been a lot, right? So typically for this strategy, I would say target a 2 to 3 risk reward. So go for either 2 or 3. You can kind of variate it, but I would go for at least 2. 2 is the minimum. And 3 is a very nice target for enough profits. And I can also see another example here, which was a perfect trade because when you were in this scenario, so you now created a new movement downwards, you see that there has been a fair value gap being created here. So this forms your supply zone. And therefore, again, you can place your entry here on the fair value gap, or you can place it on the supply zone. Let's do it on the supply zone. And as you can see, price filled up your entry, so your entry was activated here, and then price went down. Again, if you targeted a 2 to 3 risk reward and you had your stop loss above this high, you would have hit all of your take profits. You could have had even more looking at the demand zone here, because that's also how you can set your take profits. You can see a fair value gap here. So this is also a demand zone. So you can place a long trade here, or you can place your take profit on this demand zone. So again, here is the method to find these kind of entries. And this is a very simple approach. This is perfect if you're a beginner. If you're more advanced than this and you want to know more about liquidity or supply and demand itself, or how to find fair value gaps, you can watch my other videos because I go more into detail. So really quick, if you really struggle to get profitable or consistently profitable, you can send me a message on Instagram @AlanTheTrader. And then I will tell you more about my profitability program, in which you can get profitable within a few months instead of years. And this is not eligible for everyone, so you can send me a message and we'll figure out if you're eligible for this. Thanks for watching the video. I will see you next time.